Hello everyone, and thank you for joining me in today's webinar. Today is Monday, the 13th of May, and it's the beginning of a new trading week. This is Mohanad Yaoud, and I'm the Chief Markets Analyst at PU Prime. Thank you very much for joining me, and as usual, today we will be speaking a lot about markets on both sides. When it comes to the economic agenda, what are we expecting? What news we should look for during this week? Let's say that this week it is important. We have a couple of few things to look at, but it's not the most important of all, let's say. And also we will be discussing, of course, your favorite part, which is the technical analysis. I've cleaned up my charts and let's do the technical analysis part as well. But let's start first by having a look on the economic agenda for today. So it's basically Monday, the 13th of May. And today we don't have that much of important data to look for. We only have the EU economic forecasts report. It will be published today. It might affect the euro trading, but I don't really believe it's that high volatility event that we will be looking for. We also have a FOMC member, Mr. Speech. He will be giving a speech as we agreed during the last webinar that from the FOMC meeting to the following FOMC meeting, we will always try to figure out what the FOMC will do in the next meeting by listening carefully to the comments and speeches by the FOMC members. But to be honest, Mr. is not that of an important speech. However, if there is any update that we will need you to know, we will definitely post this and share this to our social media. And that's for today. Nothing pretty much that we will be looking for. Tomorrow, Tuesday, the 14th of May, we will have very important data coming from the British economy when it comes to the employment or the labor market. We have the average earnings index plus bonus, and we have the claimant count change. Let's know something really important here. Any economy has the same exact indicators. Yeah, there is slight differences. You might see that this economy has a specific indicator. It's measured in a specific way, but the goal of the economic indicators at the end stays the same, is to know how much the economy is performing, how is the economy doing at the moment. So when we talk about the indicators for the labor market, what's the main thing that we want to know? We want to know if people are going to jobs or not, if people are being employed or not. What's the rate of the unemployment? And how much money are they making from their work? So that's pretty much it, okay? The claimant count change, which is something that we will be looking at tomorrow, the 14th of May, is the most important labor market economic indicator coming out from the British economy. If you want to compare it with something, you can compare it with the NFP, which is from the United States economy. They are pretty much the same. However, this comes from the United States, so we call it the non-farm payroll or the NFB, which is the private sector jobs. And here we call it the claimant count change in the British economy. And the average earnings index plus bonus is exactly the same as the wages index that we look at in the United States economy. So economics at the end, it's not so hard to understand. It's not a lot of data or information to understand. However, you want to know if I'm looking at the British economy, okay, this is important. If I'm looking at the United States economy or the European economy or whatever it is, you just want to know those slight differences. But at the end, the economy is still an economy. The goal is the same. The economic indicators are there for a reason, and it's the same reason, regardless of what economy we're looking at. And we also have the unemployment rate. It's exactly called the same unemployment rate, nothing new. That would be for the month of March, coming also out from the British economy. So tomorrow, by the beginning of the London session, and just before the London session, 10 a.m., here would be the pre-London session. So just before the volume of London session kicks in, we will be having some very important data to look at from the British economy. And going forward, we have the CPI from the German economy. Something to watch for, but not so important. Let's give it like 40-50% probability of high moves, but I don't really believe this will happen. We have the ZEW economic sentiment. So the economic sentiment from the European and the German economies, it pretty much tells you how investors, how everyone in the economy feels about the economy. It's the general sentiment. Are we doing okay? Are we not doing okay? It's a score. It's not easy to calculate. I'll not go in more details of how to calculate it. However, at the end, we give it a point. Okay. So let's say the previous month, which was April, we scored 43.9 on the economic sentiment. If this goes up, this means that people generally in the European economy are feeling positive or are feeling, okay with the economy overall. If it goes down, it's the other way around. And that's the expectation basically for this month, which is May. So this is something that you should look for. We have the OPEC monthly report. And if in case if you don't know, um, the OPEC is the organization for countries which produce and export oil to other countries. They control around 40% of the oil production globally. So yes, they control prices in the oil market in a way. So they produce this monthly report. What do they think will happen in the oil markets? How is the supply and demand and everything else related to this production and exports and everything in the oil market? So yes, the monthly report, it's not something that drives high volatility in the market, but let's say it drives trends in the oil market, because if OPEC, let's say, see that there is an imbalance between supply and demand, they will definitely step up in the next meeting. They will take some action to try to control the supply and demand. So it's not something that you would see, okay, the report has been published. Oh, there's volatility in the market. No, it doesn't work this way. But when you understand the report, when you read it, yeah, there is some imbalance between supply and demand. The imbalance or the gap is growing higher. This means that, yeah, maybe we might see some action from those countries controlling somehow the price of oil. So this might take impact on the general trend on the oil markets. Think of it as the FOMC meeting, although the FOMC meeting, it's much more important and drives much more higher volatility. But I mean, the FOMC meeting sets general trends for where is the dollar going, where is gold going, and so on. So the OPEC monthly report somehow does the same when it comes to the oil markets. We will also have the core PPI, or the producer price index. This CPI, okay, it's the consumer price index. Both of them, CPI and PPI, they are inflation measures. They are used to understand how the inflation is doing in the economy. However, if we measure the consumer um, index, if we see, let's say I'm a consumer, you're a consumer. When we go to the grocery, buy stuff, we need to buy goods and services, we need to buy everything for our monthly consumption. You feel the price differences, right? If we measure this from our point of view as consumers, then we have the consumer price index. So I can tell you, the consumer price index tell you that the items or the goods and services that the consumer pays for has increased or decreased in value according to this percent of inflation. That's the consumer price index. On the other hand, let's see what producers are doing. The producers are people who produce goods and services. Of course, if the raw materials are going higher in price, the producers will have to pay more to buy those raw materials. So, of course, they will have some sort of inflation as well. So, having a look on the PPI is not, let's say, is as equally as important as the CPI, but it comes just after the CPI. So, we will be having the core producer price index and the producer price index for the month of April to be released tomorrow, Tuesday. I think that's enough. No, we will be having Jerome Powell, who's the federal chairman, the one who drives everything in the market. When it comes to the dollar, gold, and everything, we will be having his speech tomorrow. That will be 6 p.m., which is GMT +4. It's definitely important and to look for. Okay, on Wednesday, the 15th of May, the monthly report from the IEA has been delayed from the previous week. It wasn't really released. So we'll be having this week, the 15th of May. We'll also look at the GDP from the European economy, very important to watch for. And the most important thing or economic indicator to watch for this week will be the CPI, which is the Consumer Price Index. I believe we have just explained it, but this will be released on Wednesday from the United States economy. The CPI used to be the most important economic indicator in the inflation part, okay? So if we wanted to look at inflation, we always had the CPI as the main or the best indicator to look at. However, recently, the Federal Reserve is no longer concerned with the CPI so much. It's concerned with other inflation indicators like the PCE, which is the personal consumption expenditures. We will come to that indicator when it's time for it to be released, okay? I don't want you to get confused. I'll not be explaining both right now. However, when we look at inflation indicators, first comes the PCE, which is the most important, and then second comes the CPI. The CPI will be released. Yeah, and third comes the PPI, if you're following me. But this week we'll be having both PPI on Tuesday and then the CPI on Wednesday. So it's a tough, very tough week on the US dollar, especially on those 2 days, Tuesday and Wednesday. As we agreed, I'll not be looking at expectations. Yeah, expectations show that we might see a slight decline in inflation numbers. However, what's the source of this 3.4%? Who forecasted this? Not really 100% accurate. So I'll be looking at the 3.5%. I'll be waiting for the numbers. And yes, guys, let me tell you something. Never, never try to predict the numbers. You are not the US government. You are not a statistician working for the US government. We don't really know. You are in some part of the world. I'm in other part of the world. We are not in the US. We have no idea how things are going there. So trying to predict the numbers and trading on it, okay, we can predict it for fun, but never predict it and trade on a prediction because you never know if this will be correct or wrong. Even if you have friends, even if you have your family living in the US, you can never predict numbers. So we never predict numbers. We never trade on economic events prediction, okay? I don't really know. For the previous month, for March, the CPI on a year-over-year basis, it was 3.5%. It is a fact, okay? The calculated inflation, the calculated CPI, it was 3.5%. For this month, I don't really have an idea what will happen. You shouldn't really have an idea or try to think what will happen. However, we will wait for the numbers. If the numbers are higher, okay, we are having higher inflation. Okay, maybe the Federal Reserve will wait on the interest rates. Okay, we can then try to draw scenarios and we can trade with them. Okay, but don't take a step ahead of the economic agenda. Can we trade the news after it's released? 100%, but with some conditions or under some conditions. If the economic, let's say, landscape is clear, let's say, okay, let's try right now doing this. So the CPI, it's expected to come, or the previous CPI was 3.5%. What happens if it's higher than 3.5%? If it's higher than 3.5, so inflation is sticky, it's not easy to get the inflation numbers down. This means that the Federal Reserve might want to leave the interest rates higher for much longer on the US dollar, and we might not see interest rate cuts during this year. This means that the dollar is bullish and gold should definitely be bearish because somehow it has an inverse relationship. Okay. If inflation numbers go down, it should be the opposite. The Federal Reserve might start to cut interest rates during this year. This means that the dollar will not give you the interest it used to, so people will sell US dollar and look for other investment alternatives. This means that if inflation numbers go down, the US dollar will go down. However, what's the number? Let's say it's 3.5%. What happens if it's the same, 3.5? What if it is 3.4? Yeah, it decreased. But does it really mean that the US dollar will go lower? Because yeah, 3.5, if it goes down to 3.4, it's a slight increase. You never know what the Federal Reserve or how investors will understand and grasp this data and how it will affect the markets. So in this case, because come on, markets do not move on economic indicators. That's let's say a fact. Markets move on expectations of market participants to those market events. So let's say uh, we have some data. Data itself doesn't move markets. How we, traders, investors, people all around the world, companies, factories, whatever, how we react to this data is what moves the market because it's supply and demand. How people will react to this, you never really know if the economic landscape is not so clear. So currently, I wouldn't really advise to trade the news, and that's the bottom of it. Okay, I'm sorry, guys, if it took some time explaining this. I really hope it was clear. Personally, I don't trade economic news. If you want to go after it, because I don't really believe. Why would I? Yeah, it might give me a profit opportunity, but it might give me also a losing trade. Markets will not go away. Why don't we wait for markets to be calm and to enter into high probability trades to earn money? That's why we are here. That's why we are in the markets. It's not gambling, you know. I know this feel of adrenaline or yeah, let's do it. No, personally, I will not do it. You go do it. Good luck with it. Okay. So this has been answered. And that I think we also have the retail sales. It's an important figure to look for, but not with the CPI. When the CPI is released with the retail sales, all of the focus goes to the CPI. Crude oil inventories, it's the same weekly figure. It also will be announced on Wednesday. We have two speeches from FOMIC, Bowman and Kashkari, and they are important, not like Mester. Bowman and Kashkari are important FOMIC members. On Thursday, I think nothing. It's only the building permits and the initial and continuing jobless claims. That's the initial jobless claims, and we have the continuing jobless claims. Housing starts, not really important. Another two speeches, is it three? Four. Bostic, Mester, Harker, and Barr. So we have four FOMIC members. So let's say, okay, the general theme for this week should be the US dollar. We have very important data on the US dollar, CPI and then PPI. We have the retail sales. We have speeches from Mester, Barr, Bostic, Kashkari, like 4 or 5 members, and of course, Jerome Powell. And on Friday, nothing. Oh, on Friday, we have the CPI for the European economy. It's the same CPI, Consumer Price Index, but for the EU zone. And don't try to expect what will happen. So yeah, Monday and Tuesday, very light economic agenda. Things will start to get a little bit more difficult Wednesday through Friday. So we have Wednesday, Thursday, and Friday. We are expecting high volatility in the market. Time for technical analysis. Guys, if you have any questions regarding the economic agenda, please leave it in the comment section below. If you have any specific requests for pairs that you would like me to look at, because I almost always look at the same pairs, like the US dollar, euro versus dollar. We also look at the pound versus the US dollar. We look at gold, US oil, and the Dow Jones. So it's the general idea of the main assets. If you have a specific pair that you love trading on and you would like me to discuss it here, please leave it in the comment section right now. So we will discuss it. We are starting with empty charts here on the US dollar. How did the previous week go? So the previous week ended bullish, okay? It's a green candle after a bearish candle. This is what we call as an inside candle. Why? Because the previous week or this candle failed to go above the previous high or below the previous low. The inside candle is exactly the opposite of the engulfing bar. Let's not discuss this at the moment, but if you know what the engulfing is a higher high and a lower low than the previous candle. The inside shows that the previous week had very low volatility compared to the previous one. Okay. So in this case, what do we have on the weekly? In this case, I don't have any bias on the US dollar. We have the previous low. This is a support. Okay. We were going lower. We created some sort of support here during the last week. And the previous week, we had resistance. So that's why I don't really have a bias on the weekly time frame. Okay, we have a high, we have a low. It seems that we are moving in a sideways range. Volatility is decreasing here. That is what I'm talking about. Let's just redraw our zones. Exactly. That's the support that we found on the weekly time frame. Is it 15? Is it 105.00? Exactly. Because I always love, my supports and resistances to be round numbers. They are psychological levels that basically push prices. So it's 106, let's say 0.40. Is it 0.50? It would be better. Yes, 106.50. You can see it touched, went below, touched again, went below. So that's pretty much on the daily time frame. Again, no bias. It was a major resistance. We rejected. We were supposed to continue lower, but we formed support. Does this mean we will continue lower because we rejected a major resistance? Or does this mean we are creating support to push higher and break this resistance? I don't know. We have both scenarios here. Okay. Is it a price channel? Yeah, I think we saw this price channel during the last week. Exactly. Yeah, that's the price channel here that we are looking at. Pretty much nothing. We are just, okay. We broke below the middle line. You can see the middle line of the channel. We broke below. We are retesting it. Something tells me, okay, because we broke below the middle line, and this middle line is important. You can see the price action we've had previously here. We broke below, retest. Does it mean we will be going lower? To be honest, on the daily time frame, this seems to me like the more probable or the high probable scenario. Okay, so we had this double top pattern that we discussed during the last week, I remember. Okay, so this upward move that we saw on the weekly, yeah, it is support, but I don't really believe it's a support that will push prices higher, but it's a support that we formed to retest this broken support, and I believe we will go lower. However, that's the 4-hour time frame. I don't believe we should go any lower than that. In order to go bearish on the dollar during this week, let's do something. Let's remove everything here. That's the most recent support, and that's the most recent resistance. Okay. Technical analysis so far doesn't provide me with a solid uh, bias, either bullish or bearish. When it comes to the economic agenda, we are waiting for CPI, and that's when markets are a little bit scared because we don't know how the data will affect. Okay. However, I have the most recent support, which is 104.90. Most recent resistance comes around 105.70. Okay. And I will wait for prices to break free from this zone. A break below 104.90. You can see this clean candle here, right? This clean candle is a path of least resistance. We will definitely target the lower part of it, which is the levels of 104. points. So we will be having a clean 90 points move lower if we break below 104.90. And to be honest, I believe this is the more probable scenario. The other case is a break above 105.70. We will target the highs again of the resistance 106.50, and I believe we will then break higher. That's my scenarios here, okay? That's what I have here. Guys, there are some people who are sending questions right now to me. Please just, I will be answering it at the end of the session, okay? So given that it's an undecisive week, we are waiting for the CPI. The technicals here on the dollar shows that there is no clear bias. I will be waiting for those levels, 105.70, 104.90, break above buy, break below, we will sell. That is my honest opinion on the dollar. Do you know that the euro versus the US dollar somehow is the opposite of the dollar? Slight difference in price action. Let's have a look on the euro. Maybe the euro versus the dollar will be more clear. So if we have a bias on the euro, maybe it will give us some, bias on the dollar. Let's see. Clean charts, what's happening on the weekly? Okay, this is the bullish candle after it's like 4 weeks of straight bullish candles. 1, 2, 3, 4. Okay. However, can you see that the previous week, although it continued bullish after this bullish candle, it didn't break the high of the previous one. So this in pure momentum and in pure price action tells you that we were starting the trend higher, highs and lows like this. We then failed to register a new high. We are losing momentum to the upside on the euro, which means the euro might turn and break lower. If the euro break lower, this means the dollar will break higher. Is it? Let's wait and see. That's on the weekly time frame. So we have this weekly bias. It shows slightly bearish bias so far. What's happening on the daily time frame? I think I tried to do this price channel last week, and it wasn't really a price channel. If I do remember, yeah, it's not. It is not. Okay, the high of the previous week is the level of 1.0810, right? If we broke above this high, this means that this price channel in in which we fail to reach the lower limit will have been broken and we will continue higher. But the weekly says that maybe we will be rejecting this level. Let's have a look on the momentum on the 4 hour. Yeah, exactly. That's what I'm talking about. You can definitely see a bearish divergence here. A bearish divergence means that we are losing momentum as we go higher. We have created this high previously on price, right? With this high at the price, we had a high on the momentum indicator. We are trading around the same levels, but the momentum is lower. There is a difference in behavior between what price is doing and what the momentum is doing. So the levels are of 1.0810. I do really believe will be strong resistance that we will be rejecting during this week. We will head lower on the euro. This gives me a slight bias on the dollar that it will go higher. Is this a high probability scenario? No, we are just plotting our scenarios. We're just getting prepared for the week. What happens if we broke above 1.0810? Okay, because we are prepared on the technical analysis side that this is a strong resistance. If we broke above, we would definitely go long. I'm prepared. If we have rejection from here, bearish price action, and we move lower, I will definitely short because, again, I'm prepared. So I'm not telling you that this analysis will help you enter trades immediately. We said during the last webinar, don't follow the price. I'm having my scenarios on the charts. I'll be waiting. I'll be watching. I never, I stopped entering trades on Monday since maybe 2 years. Because on Monday, when you have the first Asian, European, and the US session, you're just testing the waters. How will the markets behave this week? Um, so we don't trade on Monday. We get ourselves ready to trade on Tuesday, Wednesday, Thursday, and Friday, which is the end of the week. So for now, we are prepared on the dollar. We have our support and resistance. We have our resistance on the euro, and we will be waiting for confirming price action. What's happening on pound? Do you know, guys, that, yeah, the euro is against the dollar, the pound is against the dollar. They are two different pairs. But do you really know, have you noticed before that the pound sometimes is a couple steps ahead of the euro? If you don't know this, try watching it. What I mean is, we said that the euro here is losing momentum, right? It still closed the previous week bullish, but we are losing momentum. What's happening here on the pound is that we already closed bearish with lower high and lower low. We are already turning bearish on the pound. So this means that I believe the pound will continue moving lower, and we will then see this move happening on the euro after. So that's the resistance that we formed. That's our most recent support. I'm slightly bearish on the pound. Sorry. That's the resistance, 1.2560 or 50, right? 2550, that seems, no, a little bit too far. 2.5, 2560 is good. 1.2560. That's the resistance we have here, and the support here lies at 2350. Is it a sort of a double top here? Let's see on the 4-hour time frame. No, not really a double top. This high is not really good. Is it a head and shoulders in formation? Anyway, what's happening here to me is bearish. Why? Speaking market structure wise, okay? Forget about the support and resistance. What was happening here is that we had a high, low, higher high. If we were going bullish, what we have supposed to see, or we were supposed to see, is a higher low, any higher low above this. But we had an equal low. So this move was basically bearish. We had selling pressure here. We are moving higher again. If we form a high here and move lower, so we have a head and shoulders, we have a lower high. A break below this would be a break of structure, and we will continue moving lower. Anyways, I'm not trying to take a couple of steps ahead of the price. However, I am bearish on the pound versus the dollar. It would be too risky to sell from here. We haven't formed a top yet. Where would your stop loss be? However, if we break below 1.2475, a confirmed break, I might think of shorting from here, let's say. If we enter our position here, the stop might be somehow a little above the previous high. Where's the target? The target should be around here. It's a clean 1.3 risk to reward. Not the best risk to reward because we will be entering a little bit late. However, it would be a high probability trade in my opinion. What happens if someone would like to short now? Okay, if you want to short now, it will definitely give you a better RR. It's like 6.3. risk to reward. However, it's not a high probability, and that's why the more risk or the higher the risk, the higher the profits. So if you want to go for more profits, you will have more risk. I don't do this. I wait for confirmations. I have my scenario here. If we break below 1.2475, I'll be shorting the pound to 1.2311. 2310. Why is 2311? 2310. Is it maybe even 23? Yeah, slightly. Okay, we just touched the 1.23 here and we headed higher. That's why I'm telling you that the round numbers are the actual supports and resistances. What's happening on gold? On the weekly time frame, okay, we said the previous week we have resistance, we have support. So that was the last resistance. We came down. Previous week was a support. So it's a trending market. It's a sideways range. It's not a clear direction. So I don't really have a bias so far on gold. High, low, and we're moving sideways. On the 4-hour time frame, that's the highs that we're looking at. That's the lows. Okay, is it 1, 2, 3, and we are heading higher? Okay, so we have a high here. I'll answer the questions by the end, okay? Because I'm a little bit getting distracted here. We broke this level, which is the equilibrium between the highs and the lows. It's 23.43. The push to the upside was great, to be honest. Momentum is good. Okay, I believe for now, gold will be testing the highs because we took our times here at the highs. We went lower, took some time here. We're heading higher. So it's a clear sideways range. And this is when technical analysis becomes somehow difficult because it's a sideways range. Anything can happen. We can go back to test the lows. We can move higher to test the highs. However, I'll be looking for a move to the upside. We had a brilliant upward move during the last week. We are correcting this right now. I believe we will be heading higher, maybe from this support 23.28. We might see an upward move. Again, we also have support here. So anywhere between 23.30 and 23.40 might be good, maybe possible buying areas. However, under one condition, we must see bullish price action from here. Okay. Would you set up sell limit for your trade or just wait till reaches the target pound dollar? I never use sell pending orders, whether limit orders or the other stop orders. I never, because why would I? The markets are not so easy to trade. Okay, sometimes I tell you that markets are easy. I'm trying my best in my ability to give you with the best analysis and make it as much possible easy. However, sometimes markets are not easy. Sometimes if you have a pending order, prices will just activate your pending order and move in the opposite direction quickly, just with a wick of a candle. Why? We always wait for confirmation. We always watch price and what's happening. So if you are not there to watch the markets when you're supposedly making money, when would you? Why wouldn't you? Just watch the markets. It's very easy on your mobile phone. Just have a look. Okay, if you have your scenarios here plotted, if you have your scenarios ready to trade the week, you will literally just lose nothing. You can, okay, what I always advise my students to do when I have any like technical analysis course or something, never analyze on your mobile phone. You should always analyze on your laptop. It's where you see the screens, where you see the charts clearly, and so on. However, after you have your scenarios ready, you can trade on your phone. You can enter trades or exit trades or follow your trades on your mobile phone. It's literally with you everywhere. No one with of us right now, like goes anywhere without his mobile phone. So if you have your supports and resistances, you know what will happen. If this happened, I will act in this way. You have your plan. Plan your trade and trade your plan. This is what we do. I don't set uh, limit orders. If you are afraid that you will miss the move, okay, and that's something that we need to say, what I will do is just below this support. Okay, we said that if we broke the support, I'll be moving lower or I'll be shorting the price. From here, just anywhere, right click, add alert on this price. You can do this on TradingView. This is what I use. You can use it on MetaTrader, and you can use it on any platform I think you use. If you're trading with Pure Prime, of course, we have the MT4, MT5, so you can still use this. And you can just choose the notifications. So can you see how many notifications I have? Notify in app, which is the mobile app. Show pop-up if I'm on my computer screen. It shows a pop-up on the desktop. It also sends an email and it plays sound. So you will know the price has reached this level just by an alert. When I see that this price has reached, I just open my phone for a second, whether I'm in the gym, whether I'm at work, whatever I'm doing, just look at the price. If the price action seems good to you, if the break is good, what time is it? Is it time of a new session opening or a London session close? Is there volume in the market? This is some things that we know whether the break is confirmed or not, and we can explain this later in later webinars. But when you confirm that, yes, this is a good price action, then you execute the trade in a matter of seconds, literally. Okay, let's end this session here with the US oil and I've answered this. Okay, US oil and the Dow Jones. US oil during the last week did absolutely nothing. What a doji candle here. The open was 78.15, the close was 78.13. The whole week we traded for 5 days and the difference in price was like just 2 cents. This means indecision. Does it mean support? We have previous support here. So after a clean candle to the downside, we reached the previous support and prices were very much indecisive, and that's what the doji candle tells you. We are heading higher from here, so I do really believe we are heading higher on the US oil during this week. If we break the previous high, we continue higher. If we break the previous low, we will continue lower. This is just the general idea on the weekly time frame. On the daily time frame, let's just redraw our zones here. Okay, overall, I'm basically bullish on the US oil. When is my buy order gonna be? What's happening here is that we have a low, high. If we head higher from here, so we'll be having a higher low. If we break the levels of 79.90, we will be having a higher high. Only then I'll be going long. So again, we will be having a target. I'll be looking at something like this. My entry would be somewhere around here. My stops will be below this low. And my targets will be around here. 1.25 risk to reward. And when we reach the target, of course, you can just open the target, close 50% of your trade, and continue moving higher. Let's set an alert here on oil, just around maybe 80.20. If prices crossed 80.20, only once alert name, look at oil for buys. Notifications again, done, create. Okay. That's on the US oil. And let's end the session with the US Dow Jones. Absolutely very bad price action here. That's the most recent support. We are definitely heading higher for resistance. That's on the weekly time frame. Not really that bad, is it? Heading higher. Yeah, that is what I'm talking about. It's heading higher since the 1st of May. It's not giving you any opportunities to buy, and the momentum is really bad. So it's moving to the upside slowly, not giving you opportunities to make money or to buy. Even if you are positioned on the Dow Jones, you know, it's slow and it's just no momentum. So personally, what I'll be doing is I'll be waiting for the Dow Jones near the highs here, around 39,900. We will definitely, it's really rare to find me telling you I'm confident with like 90% or 95% in a technical scenario. But with this upward move, I will be happy to see a move lower. So I'll be waiting for bearish price action on the Dow Jones here from the 39,900 points to short the Dow Jones for a correction. So that's what I'll be looking for on the Dow Jones during this week. So yeah, it was a long session today. It's almost like 50 minutes. I think all of the questions have been answered. If you guys have any answer or any questions, please leave it in the comments section below. If you have any feedback, please let me know right now. Any questions? No questions so far. Thank you guys. Thank you very much for your feedback. And we will meet again next Monday at the same time for the same webinar. Hopefully, I'll be in my new office by that time. Thank you very much for tuning in today. I really enjoyed this session, and we'll meet again next week. Have a good day and please stay safe.